Welcome to Kryptonite. My name is Ife, and in this video I'm going to show you how to identify support and resistance. Now, the first thing to know is what is support and what is resistance. Support is an imaginary line that traders use to identify different price levels to hold the price. It is basically a line that you as a trader can draw just to understand where the price can potentially bounce from. So this is called a support, and a resistance is an imaginary line that traders use to identify where the price is going to get rejected. So when the price gets rejected, that is the work of a resistance, and when the price holds a particular level without breaking it, that is called support. Now let me show you an example in the price chart. Right now I am on the Bitcoin USDT price chart, and this is the 1 hour time frame. For us to start, we would have to go over to this section right here and bring out a drawing tool. In this video, I am going to use the trend line for you to understand exactly how to draw support and resistance in the price chart. When you look at this price chart, you can pick out different price levels from the previous action in the price chart. For example, you see that this price made a low at around this point. It made another low at around this point. If I want to draw a line, I would have to make this line from this level to this level. Alright, this line right here can identify as a potential support in the price chart. And if the price breaks this support, then it could go lower in the nearest future. But in this example, you can see that the price was supported by this trend line and the price continued in an upward direction. That means there was a bounce in the price chart. Now let me show you an example of a resistance. Right here you can see that there are different levels in the price chart. This right here was a high, and next to it is a lower high, and the price continues to go lower. Right here you can draw a resistance line from this level all the way to this level. And you would notice that when the price touches this particular trend line, it always gets rejected. Once you've identified this potential resistance level, you can also predict that the price would get rejected in another attempt. If I zoom in, you would see that the price went up to this trend line the third time and got rejected. The fourth time, right here, it got rejected. So this was a potential resistance in the price chart. This is exactly how to identify support and resistance. Now let me show you another good example of support and resistance in the price chart. Let's go forward in price. This example would be a little bit different from the previous one I just showed you. Right now, we are going to use this horizontal ray right here. I will click on this and I can potentially put a line at this level to show me previous price support and resistance. Now this is the line I've decided to put, and let me show you exactly how this works. You can see right here that the price went up to this level, got rejected, went up again, and got rejected the second time. So this right here is a potential price level for support or resistance. When trading, you should know that previous support can turn to resistance and previous resistance can turn to support. I am going to show you exactly what I'm talking about in the price chart. Now let's go forward in price. You would see right here that as this line acted as resistance, at this particular point in the price chart, the price broke above this resistance line. And when this happens, you can see right here, the price continues to go in an upward direction after breaking a previous resistance line. Now let's go forward in price. Can you see exactly what I am talking about? Right here was a potential resistance in the price chart, and when the price broke above this resistance, you can see that this line tends to act as support. The line that was a previous resistance is now acting as support in the price chart. So this is basically how previous resistance can turn into support, and if I go forward in price, you can see that this line continues to act as support in the price chart. Now let's continue to go forward. At this particular level, you can see that the price went down and tested this support for the third time. And unfortunately, the price broke this support, and as you can see that once the price breaks the support, it tends to act as resistance all over again. Now let's go forward in price. You would see right here that when it was broken, it tends to act as resistance in the price chart. So this is another good example of previous support can tend to act as resistance, and previous resistance can tend to act as support in the price chart. You can see right here, the line is acting as support at around this level. It is acting as support, and when the price breaks down below this support level, the price tends to act as resistance. First touch right here, resistance. Second touch right here, another resistance. The third one right here is another resistance. You can now see that the line now tends to act as resistance in the price chart after it has already acted as support in the previous price action. To identify support and resistance, you basically just need to look at the previous history, and you can draw various lines to best suit your imagination. Because once millions of traders are placing their orders at a particular level all at the same time, this is what makes the price get rejected or get supported. Right now, I am going to show you how to identify support and resistance using a Fibonacci retracement. To do this, you would have to go over to this section right here. You click on this and you select this Fibonacci retracement right here. Now, the way this works is that you have to swing from a low level to a high level, or you can also swing from a high level to a low level in the price chart. In my previous video, I talked about an uptrend and a downtrend. You can see right here that at this level was the low of this uptrend, and at this point was the high of the uptrend. For us to use this Fibonacci tool, you would have to click from this level right here and swing it to the high of the trend. From this level, the bottom of the trend, to the top of the trend. And you can see that once you do this, you would see various lines right here. These lines are called Fibonacci levels. You can see right here that the first line is the 0.236, the second line is the 0.382, the third line 0.5, you can also see the 0.618 and 0.786. Once you've gone from the low to the high, let's go forward in price, you would see that the price went to a Fibonacci level. Alright, the first line right here is the 0.236, and you can see that the price was supported at this level, then the support broke to the downside and went to the next Fibonacci retracement, which is the 0.382. At this Fib level was where the price found support in the price. Soon after, the price continued to go in the upward direction. Now let's go forward in price. If I was to use my Fibonacci tool, I would click on this and swing from the low right here to the high of the trend. You can see that the price went from this high and touched the 0.382 Fibonacci level. You can now see that this Fibonacci retracement can show you potential support in the price chart. The first Fib level, which is the 0.236, as you can see that this acted as support for a short period of time, and when this line got broken to the downside, the next Fibonacci held support for the price. Now let me show you another example of how to identify resistance in the price chart. Let's go forward in price. This right here is an example of a downtrend in the price chart. For us to use this Fibonacci retracement, we would have to click on this and swing from the high of the trend to the low of the trend. Now this is because this is a downtrend. Remember, in an uptrend, we went from the low to the high, but in a downtrend, we are going from the high to the low. Alright, so we are going to swing from this point right here all the way to the low side of the trend. You can see that this was the low of this downtrend right here. The price went from this top to the bottom. Now in this case, you can see that the Fib levels are above the price, and the price got rejected first at the 0.236 right here, slightly rejected at the 0.382 right here, and ultimately got rejected at the 0.5 level right here. And this level acted as resistance in the price chart. You can see that the price continues to go lower in the nearest feature. Now let me show you another example of a downtrend using this Fibonacci retracement. This right here is another example of a downtrend. Now if we bring out the Fibonacci retracement, you can swing from the high right here to the low of the trend. You would see different Fib levels for potential resistance in the price chart. The first resistance was at around the 0.382 at this particular level. Then soon after, it had another leg to the upside, all the way to the 0.5 Fibonacci level. And when this happens, the price continues to go in the downward direction. So this basically acted as resistance in the price chart. I truly hope you've understood exactly how to identify support and resistance and how to use the Fibonacci retracement to better improve your analysis. The next step is to apply all this that I have taught you in entering a position. And to do this, you need an exchange. In this video, I am going to use the Bybit exchange, and you can use my link in the description of this video to get amazing rewards when you sign up as a new user on the Bybit exchange. If you want to place your trade, upon confirmation, right here I am going to go over to derivatives. This section, click on USDT perpetual and select the coin you want to trade. This right here is where I am going to enter a long position or a short position. If I go over to the right hand section, you can see right here, I can either enter a limit order, a market order, or a conditional order. The next step would be to place your order price and the quantity that you want to trade. You can do this using leverage. If I click on this section right here, you can see that I can use from 1x leverage to a 100x leverage in my trade, and I can set my leverage for a long position or a short position. If you're an experienced trader, then you understand what cross margin and isolated margin is. For me, I use cross margin because this uses the entire balance in my futures account to keep my position opened. Alright? But if you are a new user and you are just starting out trading, it is best for you to use isolated margin. This would only use a specific amount in your futures balance to keep your position opened, so you won't have to lose a lot of money in your trades. And also, when you are using leverage, please keep the leverage to a minimum. You can use from 1 to 5x leverage. This is very reasonable as a new trader. You should know that trading is very risky, and it is advisable for you to have a bit of knowledge before you start trading. If you like this kind of content, you can please give this video a thumbs up and try subscribe to the channel. If you want to use the Bybit exchange, my link is going to be in the description of this video, where you can get amazing rewards as a new user. And if you have any questions, you can drop them in the comment section. I will try answer all your questions. With that said, this is going to be it, and I will see you in the next video. Goodbye.